Hello, everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Please read the house rules. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my Level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the GDP month over month, United Kingdom, and we're going to discuss the GBPUSD currency pair. The next important financial news event was manufacturing sales month over month in Canada, and I'm going to discuss the USD CAD currency pair. Let us start with the first one. What is GDP month over month in United Kingdom? GDP is a short name. The full name is Gross Domestic Product. M over M means month over month, and it measures the monthly change in goods and services produced in the United Kingdom economy. It is one of the most important indicators of economic health and reflects overall growth on contraction. The financial data includes output from key economic sectors such as services, manufacturing, and construction. A higher than expected reading shows stronger economic activity and usually supports the British pound, which can push the GBPUSD higher. A weaker reading signals slowing growth and may put pressure on the British pound, leading to downside movement in the GBPUSD currency pair. Now, let me discuss the event details. On May 14th at 6 a.m. UTC time, we got the news release. The previous number was zero point 0.4, forecast was minus zero point 0.1, and the actual number we got is zero point 0.3. The currency pair we're going to focus is the GBP USD currency pair. Now, let me discuss the market context and pre-release expectations. The UK GDP forecast stood at minus 0.1%, indicating expectations of economic contraction. This was a sharp downgrade compared to the previous reading of 0.4%, reflecting concerns about slowing UK economic activity. Forex markets were poised for potential weakness in the British pound if the data confirmed contraction. However, the actual reading came in at 0.3%, beating expectations and showing that the UK economy avoided contraction. Despite the positive surprise in GDP, the GBP USD price action moved down after the news release time. Let me show you the price chart of GBP USD currency pair. This is the daily time frame. So over here we got the news on May 14th. And after the news announcement, price action of GBP USD currency pair actually dropped. So despite the surprise, getting the positive data, the price action of GPUSD still moved down after the news release time. This suggests that the currency market focused more on broader macro conditions rather than the headline beat. Now, why the GPUSD moved down? Even with better than expected GDP data, GPUSD declined due to several reasons. For example, strong US dollar pressure during the session, weak follow through buying on British pound, concerns that underlying UK economic growth remains fragile, market positioning, and profit taking after the volatility. The key Forex market drivers that we observed is the GDP beat the forecast. We got a zero point 0.3 versus the zero point 0.1 in negative. So the positive number is there and the forecast was negative. The US dollar strength dominating the price action, risk sentiment favored the US dollar, forward looking growth concerns in the UK economy, and short term positioning shifts. The technical and sentiment considerations are the price of GBPUSD showed bearish momentum after the news release despite the initial volatility. The lack of sustained upside confirms that buyers failed to hold gains. Sellers regained control after the spike. Market sentiment remained US dollar supportive. So short-term bias and the trading outlook is obviously bearish in GBP/USD currency pair. Further direction depends on US dollar strength and upcoming UK economic data. Volatility expected to remain elevated. Price action likely driven more by US dollar than the GB fundamentals in near term. Overall analysis and key takeaway is although UK GDP came in stronger than expected, it failed to support the GBP/USD currency pair. The currency market reaction highlights that macro sentiment and US dollar strength can override single economic data beats. Final key takeaway is the previous number was zero point 0.4, forecast was minus zero point 0.1, and the actual number we got is zero point 0.3. So despite a positive GDP surprise, the price action of GBPUSD moved lower due to stronger US dollar demand and broader market sentiment. The next important financial news to discuss is manufacturing sales month over month in Canada. On May 15th at 12:30 p.m. UTC time, we got this financial news event. Now, let me discuss what is manufacturing sales MORM in Canada. Manufacturing sales month over month measures the monthly change in the total value of manufactured goods sold in Canada. It reflects activity in the manufacturing sector, including industries such as machinery, transportation equipment, and food production. The financial data is an important indicator of economic strength and overall demand conditions. A higher reading suggests stronger industrial activity and supports the Canadian dollar, which can push the USD/CAD lower. A weaker reading signals declining manufacturing activity and may put pressure on the Canadian dollar, leading to the upside movement in USD/CAD currency pair. Now, the market context and pre-release expectations. The previous reading was 3.4, forecast was 3.5. The actual number we got is 3.0%. The previous reading stood at 3.4%, while the forecast pointed to a slight increase at 3.5. This suggested expectations of continued but moderating strength in Canada's manufacturing sector. However, the actual result came in at 3%, showing a clear slowdown compared to both the previous reading and market expectations. This weaker than expected financial data signaled cooling industrial activity in Canada and raised concerns about near term economic momentum. Now, let me show you a price chart of US dollar CAD currency pair. Here's the daily time frame of USD CAD currency pair, and this is where we got the news announcement on May 15th. And after the news announcement, the price of USD CAD moved higher, it moved up. Now, why the USD CAD moved up? Despite expectations for a relatively stable manufacturing sector, the weaker actual reading led to CAD selling pressure due to several reasons. For example, manufacturing sales falling below both forecast and previous number, signs of slowing Canadian industrial activity, reduced confidence in near-term Canadian dollar strength, increased demand for US dollar as a safe alternative during uncertainty. The key forex market drivers to observe: the weak manufacturing sales, 3% as compared with the 3.5% forecast, slowing Canadian industrial momentum, Canadian dollar weakness after disappointing data, US dollar strength during risk adjustment, and broader macro sentiment supporting the USD CAD to the upside. Now, let me discuss technical and sentiment considerations. The USD CAD price action showed bullish reaction after the news release, with momentum shifting in favor of the US dollar. The weaker data likely triggered short term Canadian dollar selling, break of intraday support levels, increased volatility during the Forex news release window. Market sentiment turned slightly bearish for CAD in the short term. So the short term bias is actually bullish for the USD CAD currency pair. Canadian dollar remains under pressure unless upcoming data improves. Oil price strength or weakness will continue to influence the Canadian dollar. Volatility expected to remain elevated in near term sessions. Overall analysis and key takeaway is: Canada's manufacturing sales missed expectations, confirming weaker than expected industrial activity. This disappointment led to Canadian dollar weakness and a clear upside move in USD CAD currency pair, highlighting how sensitive the currency is to manufacturing data and growth expectations. Final key takeaway is the previous number was 3.4%, forecast 3.5%. The actual number we got is 3.0%. So the 3.0% is weaker than the expected manufacturing data to lead to Canadian dollar selling pressure, pushing the USD CAD higher after the Forex news release. Now, let us take a look at previous week global market trends. I'm going to discuss the euro dollar and US dollar Swiss franc currency pairs. So let's start with the euro USD first. As far as the euro dollar is concerned, price action in euro USD is kind of trying to test this bullish trend line over here. Here's the trend line. This is the weekly time frame, and then go over to the daily. Now, in daily time frame, I was expecting a drop in price action of USD in Euro USD pair, and we did get a decline. If you remember, this was the support which I drawn, and I told you guys last week that the price of Euro USD is most likely going to move down. So this is exactly what we got. Market followed my forecast. Now, if we go over to a 1 hour time frame, basically this was the trend channel. So I told you guys that if euro really wants to go up, then it should clear this yellow color highlighted area. Otherwise, the break of the bullish trend channel is going to provide us a confirmation that euro wants to go down further. Now, at this point in time, it's quite possible that euro USD is going to drop more. I will discuss it later with more details. Next one is the US dollar Swiss franc. Swiss franc, the overall trend is down in weekly, in daily time frame. This is where we got a bullish rally right over here, a retest, some kind of a false breakout. Now market is trying to rise up over here in US dollar Swiss franc currency pair. If we go over to a 4 hour chart, this is where the support is there right over here, and maybe that is the reason why the price of US dollar Swiss franc is trying to rise up over here. So I expect further upside in US dollar Swiss franc currency pair. Next, let us take a look at current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the unemployment rate. These are the upcoming news events. Unemployment rate in Australia, and I'm going to focus on AUD USD currency pair. Next one is the core retail sales month on month in Canada, and I'm going to discuss the USD CAD currency pair. So let us start with the first one. The first important financial news event is the unemployment rate in Australia. So today is May 19th. So on May 21st at 1:30 a.m. UTC time, we're going to get this financial news release. Now let me discuss it a little bit more. What is unemployment rate in Australia? The unemployment rate measures the percentage of the total labor force that is unemployed and actively seeking work. It is one of the most important indicators of labor market health in Australia. A lower unemployment rate generally signals a strong labor market, supporting the Australian dollar and potentially pushing AUD USD higher. A higher unemployment rate suggests weakening employment conditions, which may pressure the AUD and lead to downside movement in AUD USD currency pair. Now, the important even details are the previous reading was 4.3. Forecast is also 4.3. Actual data not yet released, but it is going to be released on May 21st in coming trading days. Now, let me discuss the market context and pre-release expectations. The Australian unemployment rate is expected to remain steady at 4.3%, unchanged from the previous reading. This suggests that the labor market is currently stable with no immediate signs of significant improvement or deterioration. Market will closely watch whether the actual data confirms stability or shows unexpected weakness or strength. A reading below 4.3% would signal a stronger labor market and may support the Australian dollar. A reading above 4.3% would indicate weakening employment conditions and could pressure the AUD USD lower. Now, why AUD USD could move? Well, there are key drivers for price action, and that includes actual unemployment rate versus forecast and the previous number, strength or weakness in Australia's labor market, Reserve Bank of Australia's policy expectations, US dollar strength, and global risk sentiment. investor reaction to employment stability or deterioration. Even small deviations from expectations can create sharp volatility in AUD-USD currency pair. Technical and sentiment considerations. AUD-USD may experience increased volatility during the release time of the news event, as employment data is a high impact economic indicator. Market sentiment will depend on whether the labor market remains stable or shows sign of weakening. Stronger employment data generally supports Australian dollar, while weaker data can trigger selling pressure. Now, my trading outlook is somewhat, I would say, neutral as far as the uh, numbers are concerned, because the previous reading was 4.3, the forecast is also 4.3. So I would say the upside potential for AUD USD is there if unemployment comes below 4.3%. The downside risk is there if unemployment rises above 4.3%. So expect sharp volatility immediately after the news release, followed by possible retracement depending on the US dollar movement. Let me show you the price chart of AUD USD currency pair. So here's the weekly time frame. Market is kind of trying to print a top over here. Here's the daily time frame. Price action took out this support area, and the way I see, market wants to go down even further in AUD USD currency pair. The overall trend is up, but the way market is falling down, we might even get a test of this trend line in coming trading days. Okay. The overall analysis and key takeaway is Australia's unemployment rate is expected to remain steady at 4.3%, signaling a stable labor market. The actual outcome will be crucial in determining short-term AUD USD direction, especially in combination with broader US dollar strength and global risk sentiment. Final key takeaway is the previous reading was 4.3%, forecast is also 4.3%, and the actual data not yet released. The price of AUD USD direction will depend on whether the labor market remains stable or shows unexpected improvement or deterioration, with volatility expected around the news release time. The next important news is the core retail sales month over month in Canada. Now, what is core retail sales month over month in Canada? Core retail sales, MRM stands for month over month, measures the monthly change in the total value of retail sales in Canada, excluding automobiles. It is a key indicator of consumer spending and overall economic activity. Consumer spending makes up a large portion of Canada's economic activity, making this report an important signal for economic strength. A higher reading suggests stronger consumer demand and supports the Canadian dollar, which can push the price of USD CAD lower. A weaker reading signals slowing consumer activity and may pressure the Canadian dollar, leading to upside movement in USD CAD currency pair. Now the event details. On May 22nd at 12:30 p.m. UTC time, we will get the financial news event. The previous reading is 0.5%, forecast is 0.9%, actual data not yet released. The core retail sales in Canada are expected to rise to 0.9%, up from the previous reading of 0.5%. This suggests expectations of stronger consumer spending momentum and improving domestic demand conditions. If the forecast is met or exceeded, it would indicate stronger household consumption and could support the Canadian dollar. However, if the actual reading falls below expectations, it may signal weakening consumer demand and reduced economic momentum. Now, why I expect the price of USD CAD to move? Well, there are key drivers for the price action, and that includes actual retail sales versus forecast and the previous number, strength of Canadian consumer spending, Bank of Canada interest rate expectations, US dollar strength, and global risk sentiment. Last but not least is the oil price movements. That is a key driver for Canadian dollar. Even small deviations from expectations can trigger sharp volatility in USD CAD currency pair. Technical and sentiment considerations. USD CAD is likely to experience increased volatility during the release time. Let me show you the chart of USD CAD currency pair. Here's the daily time frame. Stronger than expected retail sales typically supports the Canadian dollar and pressure the USD CAD lower. Weaker data generally supports USD CAD upside due to Canadian dollar weakness. Well, market is already going up in USD CAD currency pair. Market sentiment and crude oil prices may, amplify the price reaction on USD CAD currency pair. So at this point in time, as far as the fundamentals are concerned, my forecast is neutral because uh, you know uh, we haven't got the actual news come out, and if the if market provides us a 0.9% number, that means the upside potential for USD CAD is there. If the data comes um, um, or meets the 0.9%, or let's say it exceeds, if the data is going to exceed the 0.9% number, then the USD CAD is going to drop. If the data comes below 0.9%, then the price of USD CAD is going to rise up. So expect sharp short-term volatility followed by possible retracement depending on broader US dollar strength. Overall analysis is the Canada's core retail sales are expected to improve significantly from 0.5% to 0.9%, that is closer to a one digit number, suggesting stronger consumer activity and improving domestic demand conditions. The actual result will be a key driver for short term USD CAD direction, especially in combination with the US dollar momentum and oil price movements. Final key takeaway is the previous reading we got is 0.5%. The expectation or the forecast is 0.9%. Actual data not yet released, but it is going to be released on May 22nd at 12:30 p.m. UTC time. Market expectations point towards stronger Canadian consumer spending, and USD CAD reaction will depend on whether the Forex data confirms or disappoints this financial outlook. Now, let us take a look at current week Forex market trends. I'm going to discuss the Euro USD, AUD USD, USD CAD, and the spot gold. So let's start with the Euro dollar. As far as the Euro dollar is concerned, the trend looks bullish in weekly time frame. However, in daily time frame, you can see market is trying to move down over here. So this looks like to me Euro is probably wants to go down even further over here. Expect further weakness in price action of Euro USD currency pair. In 1 hour time frame, we might get a short term, I would say, sideways price action maybe. So it's possible that we might get a bullish leg in Euro USD currency pair, and then market is probably going to drop lower. So the forecast is bearish in Euro USD currency pair. The time frame is the 1 hour. Next is the Australian dollar AUD USD currency pair. Regarding the Australian dollar, it seems to me we got a short-term top over here, and market wants to drop over here. The way I see, AUD USD is going to drop more. Okay. So my forecast is bearish. in AUD USD currency pair. Sometimes what happens that market tries to test this trend line and then bounce back up. So we will see how the market is going to react at this upward sloping trend line. Okay. So on a short term basis, I expect for the weakness in price action of AUD USD currency pair. Next we have is the US dollar versus Canadian dollar currency pair. USD CAD currency pair, the forecast is bullish, and it's quite possible. Let me zoom out a little bit. That market tries to rise up even further over here. Okay. Next one is the spot gold. Spot gold, the trend is up in weekly time frame. In daily time frame, it seems to me price action wants to move sideways first. Okay. Let me select the second trend line. So the way I see spot gold is most likely going to drop a little bit, then rise up, and then drop more after that. But the overall trend is still bullish in weekly time frame in longer term charts. Here's the zone, the support area. So market is probably going to hit this level first. And then from this zone, we might get a bullish rally in XAU USD pair, the spot gold. I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, please feel free to type them in the chat box. I will be happy to answer your questions. Here's a question. Do you use 1 minute time frame for trading? No, I do not use. I use the medium term to long term charts. Okay, here's a question. Could weaker Canadian manufacturing activity affect future Bank of Canada policy expectations? Yes, the weaker Canadian manufacturing activity can influence future Bank of Canada policy expectations, but usually indirectly and together with other important financial data, not from one report alone. For example, manufacturing is a key growth signal, and the manufacturing reflects business investment, export demand, industrial production strength. Okay. Um, Also, a slower growth increases rate cut expectations. By rate cut, I mean interest rate cut expectations. So when economic growth softens, the Bank of Canada may reduce the need for restrictive high interest rates, consider rate cuts earlier or more aggressively, and shift toward a more dovish uh, economic policy outlook. Okay. Okay, here's another question. If there is low inflation rate, the price of asset will rise. Are there any cases that it went down? Well, not necessary. The idea that low inflation automatically makes trading instrument or asset prices rise is too simplified. In real markets, assets can rise or fall in low inflation depending on why inflation is low and what expectations are driving the monetary policy. Let me give you an example. Let's say, low inflation is there, and let's say it can support the asset prices. So low inflation is usually positive for assets when it means central bank can keep interest rates low, borrowing remains cheap, and liquidity stays in the financial system. This often supports the stock market, gold, risk assets, and sometimes even real estate. So yes, in a soft landing or stable economy, low inflation can support asset prices. Now, when low inflation leads to asset prices falling, yes, this happens as well. Low inflation can also be a bearish signal for assets when it reflects economic weakness. This happen in cases like, let's say, a demand collapse in weak economy. If inflation falls because consumers are not spending, businesses earn less, economic growth slows, and earning expectations drop. So stocks can fall even though inflation is low. So if you want to see an example, a logical one, I would say, is low inflation doesn't it means weak demand, and it means recession fears and the asset sell off. Okay. So let us review what we have learned today. We discussed about the unemployment rate Australia, core retail sales in Canada, and I also discussed EURUSD, AUDUSD, CAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true executive